Did you know that just by recognizing these five candlesticks patterns, you can predict the market next move and make profitable trades? All what you need to do is to stick to this video, because I'm going to explain, I'm going to also review everything that you can actually make money from this kind of trading. So you cannot know everything about trading without knowing the foundations or the basics. So without wasting much of your time, welcome to crypto era. Whether you are new to crypto or an experienced trader, this channel is your guide to mastering cryptocurrency arbitrage, and I also break down strategies, market trends, and on-chain insights. I actually talk about everything about crypto, whether it's arbitrage, whether it's anything that is concerned crypto. I actually talk in this channel. So I'm going to show you how you can actually make money from cryptos. So but basically what we are actually looking at is how you can actually make money. When knowing these five candlesticks, it will help you a lot. So all these candlesticks, they have their own function and they have what they stand for. So that is what I actually want to show you. These candlesticks you are seeing here in this chart, they represent one thing or the other. So candlestick pattern is crucial in crypto trading because they help traders analyze price movement and predict market trends. It also helps traders to identify market trends, which shows whether the market is bullish or bearish. It helps you to make decision or determine if the market is going to reverse or continue in the same direction. Whereas it also improve entry and exit timing. It tells you when to enter into a trade and when to exit. So all these things we are actually going to learn in this video. So you are just need to stick around and also subscribe to this channel, so that anytime I post new videos like this, you get to be notified. So this candlesticks, it's very important in both crypto and both in crypto trading and forex trading. It makes trading more accurate when combined with indicators like RSI, BACD, Bollinger Band, etc. So all these five candlestick patterns work in all cryptos such as Bitcoin, Ethereum, and other altcoins. As I said earlier, we are going to talk about the five candlestick patterns and what they represent. So first here in our list is Doji. This doji is a candlestick formed when the open and close prices are nearly the same, mostly indicating indecision in the market. What do you understand by indecision? Indecision has to do is a process whereby buyers and sellers are equal. There's no one that is dominating the market or making the market to move in a particular direction. All of them are moving in the same direction, and in that process it is called consolidated or consolidation way. Like you cannot decide the trend of the market. You only see the market moving in a sideways manner. So that is what doji actually tells about in the market. But in some cases, if you see a doji candlestick, it can either stand for it can either make the market to reverse to the upside or to the downside. So it just best for you to first of all know the trend of the market before you either consider or make your decision. Anytime you see doji like this, anytime you see a candlestick that has very small body and long wicks, it is doji. It is dodgy. So you can actually see the arrow pointing to them. So those are dodgy candlestick. I have actually explained what it means in the market. This is another example. This is also a dodgy candlestick pattern, but this kind of dodgy is called dragonfly dodgy. It's very strong. Anytime you see this kind of dodgy pattern, it is very strong too. It has a very strong potential that the market is either going to go up or or come down. If you locate it in the downtrend, it means that the market is going to reverse to the upside. If you meet it in an uptrend, it means that the market is going to reverse and come down. So it has a very strong potential to tell you when the market is about to reverse. The second here in our list is hammer and hanging man. Hammer appears during a downtrend, signaling a potential reversal. It has a small body near the top and long lower wick. So this is hammer candle. This is actually hammer candle. Once it looks like it looks like a dragonfly dodgy candlestick, but this one, the body is at least a little bit bigger than the dragonfly's own. So here, what you need to look out for is anytime you come to the market, you see this hammer candlestick. It it signifies that the market is either going to go up, because this actually happened during a downtrend. Hammer candle appears during a downtrend. You can never see it during an uptrend. It's always on the downtrend, signifying that the market is actually going to go up. So anytime you see a candle like this, you need to watch the market very well. So if you see an hammer candle like this and the next candle that appears is a large green candle, it means that the market is actually going to go up. So what I normally do in my own case is I will wait for a two candle after the hammer candle. I wait for the two candlestick to appear, a two bullish candlesticks actually to appear before I enter the market. So what you can see here again is inverted hammer. What do you understand by inverted hammer? It's just like hammer itself, but you can see they are the same, but the other wick is pointed up while the body of the candle is below. So this inverted hammer is also happens in a downtrend when a coin is actually bearish, or when a token is bearish. And whenever you know that you are on a downtrend and this happen and you see this inverted or an hammer candle like this, just know that, just wait for the coin to maybe, sorry, wait for the next candle to show a bullish candle, then wait for the second candle again to also be bullish before you enter into the trade at the open and buy it. So that is it. Man is actually contrary to hammer candlestick. This one appears during an uptrend, signaling a possible trend reversal. It looks like the hammer but in the opposite trending direction. Understand? So anytime you see this, you see you see a hanging man. This, let me sound this again. It happens during an uptrend. That means the market is actually bullish. Then anytime the market is bullish in a certain place and this happen, it's actually signaling you that the market is going to reverse to the downside. This is also another example of hanging man. It just like every it just the same with hammer candlestick, but the difference here is hammer candlestick happens during a downtrend and this and hanging man happens during an uptrend, signaling that the market is going to come down. Candlestick patterns we are going to look at is engulfing candlestick. Please take note of all these things I'm telling you. Just make sure you put them in practice. If you have a book and a pen, just jot down all these things that I'm telling you now, because it will actually help you in the future if actually you want to engage into trading. But if I were you, if I say, okay, let me sound this to beginners. If you are a beginner and you actually want to trade, focus more on spot trading. Focus more on spot trading. When you know that you trade, you have money to risk, you now jump into future trading. Future trading is more risky than spot trading. So while spot trading only allows you to buy low and sell high, future trading can actually allows you to buy both the you can buy long and you can buy short. So in future trading, you predict whether the market is going to go up or come down. While while in spot trading you only buy low and sell high. So I will advise you people to start with spot trading to learn it very well. So another candlestick, the third candlestick in our list is engulfing candlestick. Actually, we have two types of engulfing candlestick: the bullish engulfing and the bearish engulfing candlestick. So let's start with the bullish. You can see the bullish engulfing candlesticks. The bullish engulfing candlesticks here is a small red candlestick followed by a larger green candlestick that completely engulf the previous one. It helps to show or signal a potential upward trend. I don't know if you are getting what I'm trying to tell you. This is a small red candlestick. You can see it there. And look at the large green candlestick here on top. This one you are seeing here. So anytime you see a small red candlestick and a large green bullish candlestick, it signifies that the market is actually going to go up. And make sure that the candlestick actually engulf the green candlestick actually engulf the red candlestick. What do I mean by engulf? Make sure that it is bigger than the red candlesticks. So if you don't understand anything here on what I'm trying to tell you, you can actually drop a comment. I will not hesitate to answer everybody. I will make sure that I answer you and make sure that you understand what you are actually watching. Okay, so let's talk about the bearish engulfing candlestick. This is the bearish engulfing candlestick. Is contrary to the bullish engulfing candlestick. Here here a bearish engulfing candlestick forms when there is a small green candlestick followed by a larger red candlestick that engulfs the first one, indicating a potential downward trend. Based on what I showed you earlier, so this one is bearish engulfing candlesticks. It happens only there is a small green candlestick and a larger red candlestick, signaling that the market is actually going to go down. Then in my own case, I would definitely advise you to always wait. After you see a candle pattern like this, a small green and a large red, you wait for another confirmation of a red candlestick before you enter into the market. The fourth candlesticks here in our list is morning star slash evening star. So what is morning star candle pattern? This morning star candle pattern is a three candle pattern signaling a reversal from downtrend to uptrend. It is made up of a large red candle and a small candle followed by a large green candle. Let me take that again. I said a morning candlestick is actually a three pattern candlestick that signal that the trade is actually going to go up, and this usually happen in a downtrend, signaling that the market is not going to still continue in that downtrend, that it's actually going to reverse to the upside. So, and if actually a market is, for instance, if a market is still on a downtrend, this is still on a downtrend, this red means that the market is bearish. And after you spot out this and you see another small candle like this, small candle, sorry, you see another small candle, here where you see that dot, this small candle, and you see another larger bullish candle, it signifies that the market is going to go up. And this pattern is called morning star candlestick pattern. It allows you to know when the market is going to reverse from the downside to the upside. And this happens when you see a large bearish candlestick with a small candlestick. It can either be bearish or bullish candlestick, then you see another large green candlestick which is bullish candlestick, that's when you enter into the trade and you buy. Let's talk about evening star. Evening star is also contrary to morning star. Here is a three candle pattern signals a reversal from uptrend to downtrend, consisting of a large green candle, a small body candle, and a large red candle. So based on what I explained previously on a morning star, here is contrary, is opposite to evening star. Here in evening star, this happen when you are on an uptrend, when the market is in uptrend, and you see a large bullish candlestick and a small candlestick, can either be red or green, then followed by another large red candlestick in signaling that the market is going down. With this, you can actually make a decision to know where to enter the trade or exit the trade. So let's move to the last one in our list. Please, as you are watching, don't forget to subscribe, turn on the notification button so that you get notified anytime I post videos like this. There are so many candlesticks that you can actually use to identify the market trend, but this is the last one I'm going to show you in this video. So if you actually want me to do more videos on candlesticks like this, you drop your comments. I'm going to look at it and make another video for you guys. So this is shooting star. This candlestick appears after an uptrend and signal a potential reversal. This only happens in an uptrend, just like inverted hammer that happened in a downtrend, whereas shooting star happen in an uptrend, showing that the market is actually going to go down, is going to reverse down. Okay, so how do you identify short shooting star? Shooting star has a small body near the bottom with a long upper wick. You can see the small body here that points down, and the wick is that black tiny thing you are seeing on top of the red candle. That is wick. So whenever you see this kind of candle pattern, just wait for a confirmation of a red candle and a second red candle too before you enter into the market. A lot of people don't tell you this. They don't tell you this. That is when after you mark your structure, your break of structure, your resistance and support level and everything. You think, oh, you don't know which candlesticks you are actually marking at. You don't know what is going to happen next after the candlesticks. So you need to learn all these candlesticks and put it in practice so that you always have a win-win. Always combine these candlesticks with indicators like Bollinger Band and the rest. So in my next video, I'm going to show you how to use Bollinger Band and RSI. You just need to subscribe for my next video.